All right. Assalamu alaikum, and I welcome you all to this introductory video of the ACCA paper taxation. My name is Zya Rana, and I do teach the taxation, financial reporting, and the advanced taxation papers of ACCA. In this video, I would be guiding you with respect to multiple things with like paper format, relevant variant for us, examinability, syllabus areas, all of these things which we are going to cover in this video. We have to select this UK variant at time of booking our exam. There are multiple variants available for the taxation paper, but our relevant variant is UK variant, right? And our examinable Finance Act is Finance Act 2023. This Finance Act 2023 is relevant for those students who would be taking this exam from June 24 till March 25 exam sessions. I repeat, Finance Act 2023 is relevant for those students who are going to take TX exam in any of these 4 exam sessions. And also make sure that the study material which you are using, that should also contain this heading, Finance Act 2023, if it is available on your study stuff. So that study stuff is relevant for you guys for your preparation for these exam sessions. Why it is important to follow the same study stuff and the materials? Because taxation paper is based on Finance Act, and any Finance Act is relevant for 4 exam sessions. The different tax rates and allowances are used for different Finance Acts. And in this course, we shall be studying the taxation paper according to the current and the updated Finance Act, which is 2023. Here we have the paper format. Taxation paper is divided into 3 sections: A, Section B, and Section C. Section A is of 15 objective test questions into 2 marks each, and the total marks available are 30 marks. Section B is also based on 15 objective test questions, and the total marks are available for this section is also 30 marks. But keep remember, in Section B, these questions are not isolated questions like Section A questions. In Section B, there would be 3 scenarios. Each scenario would be having 5 questions. So in total, 15 questions worth 2 marks each, 30 marks for Section B. And these 3 scenarios are from defined areas. For example, one scenario from CGT, capital gain tax, another scenario from inheritance tax, IST, and one scenario from value added tax. I repeat, that's the beauty of taxation, that we know the areas where from the Section B questions would be examined. One from capital gains, one from inheritance tax, and third scenario from value added tax, right? And if we talk about Section C, there will be constructive response questions. And there are 3 constructive response questions, one of them from income taxes, another one from corporation taxes, another from tax planning. So these 3 CRQs are examined. Income tax question is for 15 marks, corporation tax question is for 15 marks, whereas tax planning question is for 10 marks. In total, 40 marks are available for Section C. I also do teach, as I told you, I also do teach financial reporting paper, but for FR paper, no areas are defined for any section of the paper. Like we cannot say in FR, there will be scenarios from the XYZ topic. No, we cannot say like TX. And in FR, we cannot say that these Section C questions will be from this area, and that area. No, it's not like that. But these things can be these are defined by the examiner, that I would be testing capital gains taxes, inheritance taxes, value added taxes in Section B, whereas the income tax, the corporation tax, and the tax planning questions in section C, and section A can be tested from any area of the syllabus. No things, no chapters, no topics are defined for section A, right? In total, 100 marks paper, and for passing this paper, 50% marks are required to pass TX. I can tell you that TX is one of the lengthiest syllabus as compared to other papers in skills module. Plus, it has the highest pass rate as compared to other skills paper. Like, it normally has pass rates in between 48 to 56. And there's the highest one from any of the other skills paper, right? Let's move further. Here we have few names with respect to types of taxes. There are multiple types of taxes. For example, capital gains tax, inheritance tax, value added tax, income tax, corporation tax, NICs, national insurance contributions. From these types of taxes, few are falling in between here, capital or revenue or neither type of tax, and also are falling in the direct and indirect category. Let me discuss one by one. In accounting, we do talk about two types of expenses. One of them is revenue expense, second one is capital expense. And whenever we use the term capital expense, normally this expense is pertaining to a non-current asset acquisition. When we use this term capital expense, normally it means we have purchased a non-current asset. So you can see over here, the term is capital gains tax. In accounting, when we dispose an asset, we say that gain on disposal. But the same term in taxation is used as capital gains. In accounting, the relevant term is gain on disposal, but for taxation purposes, what we use capital gains. Whenever a person is disposing, a person means any individual person or a company, when any non-current asset is disposed of, capital gains taxes are applicable. Due to non-current assets involvement, we can say that capital gains tax is a type of capital tax due to the involvement of non-current assets. And it is applicable, capital gain tax is applicable on the value of the gains amount, directly applicable on the gains amount. So we can say that it's a direct tax. Both the points are meeting. Due to the involvement of non-current assets, it's capital in nature, it's a capital-based tax. And it is directly applicable on the value of the gains amount. So we can say that it's a direct tax. Second one, inheritance tax. In UK, at time of death of a person, the estate is calculated and that estate is transferred to beneficiaries according to the will of the person. And inheritance tax is a tax which is applicable at time of death of a person. And it is applicable to the estate value. In estate, there are non-current assets are added. So we can say that inheritance tax is also another capital tax due to the involvement of non-current assets. And it is directly applicable on the value of the non-current assets. So it's a direct tax. Whenever we do consume, we means you and I, the end consumer consumes the goods and services. So no capital asset is involved, no income is involved, rather we are spending. So VAT is neither type from capital or revenue. Plus, it's an indirect tax because it's not directly applicable on us. It's transfers from manufacturer to retailer to wholesalers, from wholesaler to retailers, then from retailers to consumers to end consumers. It basically an indirect tax which is borne by the end consumer, not directly but indirectly. I repeat, in value added tax, sometimes it is also termed as sales tax or general sales tax. It's an indirect tax and it is also not applicable on the due to capital base, due to revenue base. It's not like that. It's neither kind of tax from these two. It's neither kind. Plus, it is applicable indirectly, not directly. It transfers from one to another and borne by the end consumer. If we talk about the next one, income taxes, these are the basic types of tax which are the main areas, main chapters, main topics of the taxation paper as well. So I'm giving you a basic brief about these types of taxes just to give you an idea that what we are going to study in the TX syllabus. Income tax is a revenue-based tax because we are getting income and would be paying taxes. We are getting revenues and have to pay tax. So income tax is the taxation of individual person, based on the revenues earned by the individual person, and it is directly applicable on the value of revenues or profits or the income levels. So income tax is a revenue-based tax, which is a direct tax. When a company earns profits or income, company also has to pay taxes. As individual person getting income paying tax, which is termed as income tax. But when a company is paying taxes, such taxes are termed as corporation taxes. So corporation taxes are revenue-based taxes and also directly applicable to the level of the profits earned by the companies. So same case as the income taxes are the revenue-based taxes and direct taxes. So the corporation taxes are also the revenue taxes and the direct taxes as well. Apart from the normal tax liabilities, UK residents also have to make national insurance contributions. That is also based on the income levels and to the values of the income levels. So it's a revenue nature tax and a direct tax. Such table can also be examined in your normally in your section A for 2 marks. And these types of taxes are basically the main topics, the main areas of the TX syllabus. We shall be covering all of these one by one in very much detail. So what we have discussed till now, we have talked about Finance Act thing. This Finance Act 23 is applicable for those who would be taking TX exam in any of these 4 exam sessions. Thereafter, we talked about the paper format in section A, 15 questions, section B, 3 scenarios, in total 15 questions. And in section C, there would be 3 constructive response questions. Thereafter, we talked about types of taxes. There are 1, 2, 3, 4, 5, 6. Mainly these types of taxes are divided into 6 categories. Few of these are capital and direct, few of these are revenue and direct. And one of the example is neither and indirect, right? Here we have another heading with respect to HMRC, which is a tax governing body. Like each and every country has its own taxation function and the own taxation authority. But as we are talking about UK taxes, so UK tax governing body name is HMRC. Before the death of the Queen, the full form was Her Majesty Revenue and Customs. But after the death of the Queen, now HMRC stands for His Majesty Revenue and Customs. Here we have certain responsibilities pointers, responsibilities of a tax governing body, and the UK tax governing body is HMRC. There is a detailed list which are the responsibilities of any tax governing body, but here we have few points just to have an idea that what are the main responsibilities of a tax governing body. Obviously, the tax collection and the payments. Paying child benefits to the taxpayer, that's another responsibility of the HMRC. What is child benefit? It's a petty topic in tax syllabus, so we shall be covering that as well. Conducting tax audits or conducting audits for detecting any frauds by the taxpayers, to identify such things, to scrutinize the documents of the taxpayers. So all these are the responsibilities, or you can say the function of the HMRC. Obviously, the maintaining of tax records is another responsibility. Yeah, this one is very important. any taxation authority always tries to find possible areas of tax generation. They always try to find the new areas where from they can collect the tax from the taxpayers. Why? Because our taxes, the taxpayers' taxes, is the revenue for the government, and government has to meet multiple responsibilities. For example, giving infrastructures in the country and providing the education facilities, providing medical facilities. All of these are the responsibilities of any government. So government meet these expenses by their revenue, and their revenue is our taxes, which are paid by the individual person or paid by the companies, right? So they always try to maximize their revenues by identifying the possible areas of tax generations to collect more taxes from the taxpayer, so they can increase their income levels, because our tax is the revenue for the government authority. Providing tax awareness and providing any clarity on taxation laws to taxpayers is another responsibility of HMRC. Let's say you and I, if we are unclear on any tax law, we can write to HMRC. If we are UK, if we are in UK and we are following the UK taxes, and if we are unaware with anything, we can write to HMRC, and there's a responsibility of HMRC to guide us on this. And also to educate, inform the public about their tax paying duties, because as I told you, the tax collected by the government is revenue for them, and they have to meet their expenses by using these amounts. So it's another requirement for the HMRC, for tax body, to educate people and make sure they are paying their tax liabilities, right? As I told you, there is a number of responsibilities list, which is the responsibility of any taxation authority. But here we discuss few points just for the reference, right? On the next slide, maybe you have ever heard about these two terms. One of them is tax avoidance, sometimes also termed as tax planning. And the other one is tax evasion. Both of these are used for same purposes. Both of these are used for minimizing the tax liabilities. I repeat, tax avoidance and the tax evasion, the end result of these two is same. These two are used for minimizing the tax liabilities, but one of these two is illegal and the other one is legal. Tax evasion, evading tax by illegal means, it's an illegal activity, and fines, penalties, all these are the implication when a taxpayer evading tax, and if deducted by any tax audit, so that's an illegal activity. Minimizing your tax liabilities by evading your income, by reducing your income levels. But on the other hand, if you are selecting the loopholes, if you are identifying the loopholes in the taxation laws, and you try to minimize your tax liability within the by within the corners of the tax laws, then that's not the illegal activity. Like for example, there are three options available for the taxpayers to calculate their tax liabilities, and they can opt any of the options from these three. Let's say for myself, I selected, let's say, option number 2. In option number 2, my tax liability is calculated as compared to other options. It's lower in option 2. So I am selecting option 2. That's my discretion, because that's option 2 is favorable for myself. So that's tax avoidance, or I'm planning my taxes to minimize my tax liabilities. For example, for yourself, option 3 is beneficial for you. In option, if you opt option 3, your tax liabilities will be lower as compared to other options. So that is your discretion. You are selecting option 3 within the corners of the tax laws. These options are allowed by the tax laws. And if you are selecting any option which is in favor of you, so that's not an illegal activity. That's legal activity, means you are minimizing tax liabilities by applying the favorable options. It's not an illegal activity, which does not entail misleading HMRC. So that's basically the tax planning. Both of these are giving the same thing. The agenda, the objective for these two is same, minimizing their tax liabilities. But one of these, one of the activity is illegal, and the second activity is legal activity. So this thing can also be examined in section A of the paper for 2 marks. Here we have, on the next slide, here we have the behavior of tax rates. Let's discuss about the behavior of tax rates. And we have 3 heading for this discussion. One of them is proportional rates, progressive rates, and the regressive rates. Here we have a heading with respect to income level, and the other heading with respect to the tax amounts. And the third heading is a learning from these examples. Let's talk about from the first one. If income level is 1000, on this 1000, the tax, let's say tax amount is 200. Your income has increased in a proportion of 2. Now you have started getting 2000. And you're on this 2000, you have to pay tax of 400. Please check. Tax is also increased in the same proportion as their increase in income. If income is increased in the proportion of 2, your tax rates are also increased in a proportion of 2. So you are paying tax of 400 on 2000, and you are paying 200 on 1000. What we can conclude, we can say that tax increased in the same proportion as the income increased, because this proportion is same here. Progressive rates. You are getting an income of 1000, but on this, when you are getting 1000 income, you have to pay tax of 200. And let's say your income has increased to 2000. It's increased in a proportion of 2. But on 2000, you now have to pay tax amount of 500. You can say that the tax which are increased over here, they are increasing in a higher proportion as compared to income. So what we can say that the tax increased in a higher proportion as the income increased. Income has increased in a proportion of 2, but the tax rates have increased in a greater proportion as compared to income levels. What next is there? You are getting income of 1000, paying tax of 200. Your income has increased 2000, and on this 2000 you have to pay tax of 300. Check. Over here, the tax increased in a lower proportion as income increased. How? Income increased in a proportion of 2, but if the tax has increased in the same proportion, so instead of 300, 400 must be there. But over here, the tax increased in a lower proportion as the increase in income level. This regressive rates is also termed as inverse of progressive. Inverse of progressive. Regressive tax rates are also termed as inverse of progressive. So here we have the behavior of the tax rates. Sometime if income is increasing, tax rate would be increasing. And the other times, if income is increasing, tax rates may be decreasing. So these are the trends which we have to check, that which type of tax rates and what is the behavior of the tax rates. And according to the behavior of the tax rates, there are basically 3 behaviors: proportional rates, progressive rates, and the regressive rates. All right. From now, we are going to start discussing a formal area, which is income tax or the personal tax. Income tax or personal tax is the taxation of individual person. Let's say you are in UK and you are computing your taxes. So your tax liability is calculated, and that tax is termed as income tax or the personal tax. What we can say that? We can say that the individual person taxation is termed as income tax. I repeat, personal tax or income tax. What exactly do you mean by this? When you and I, we in the capacity of individual person are paying taxes, our tax liabilities are termed as income taxes. And income tax is based on a fiscal year or a tax year. And our examinable fiscal year is fiscal year 23-24. Remember a term which we use at the start of the discussion, that is Finance Act 2023. That is a legislation applicable to 4 exam session. In being in this legislation, if we have to find the taxation of individual person, that should be calculated according to a fiscal year. And being in this legislation of Finance Act 23, what is a fiscal year? That is fiscal year 23-24. And individual person tax liabilities are calculated according to the fiscal year 23-24, which starts from 6 April 23 and ends on 5th April 24. This date is relevant for those students who would be taking TX from June 24 till March 25 exam session. So please keep this date in mind. In each and every question, whenever to calculate the tax liabilities, the tax amounts, we have to follow this fiscal year dates. For individual person taxation, fiscal year 23-24 is relevant. It starts from 6 April 23 and ends on 5th April 24. For the taxation of the income taxes, for the taxation of individual person, we must know about the sources of income. For any individual person, there are maximum 6 sources of income. One of them is property income. Second is employment income. Third is trading income, interest income, dividend income, and the pension income. For the calculation of income taxes, we must first know about the sources of income. And for any individual person, there may be maximum 6 sources of income, not more than that. What are these 6 sources? Property, employment, trading, interest, dividend, pension. And importantly, these 6 sources are not taxed separately. Rather, we have to take the total by adding income from all of these sources. First of all, do take the total income. From this total income, we can deduct the personal allowance. Personal allowance is basically a sort of tax-free income on which no tax liabilities are there. And 12570 is a fixed amount which is applicable for this fiscal year 23-24. For fiscal year 23-24, personal allowance or tax-free income amount is 12570, which is given by HMRC. From the total income, if we deduct the personal allowance, so finally the taxable income would be calculated. I repeat, for the calculation of income taxes or the personal taxes, you must know about the sources of income of a person, and there may be maximum 6 sources of income. And it's also not necessary for each question there must be 6 sources. No, it's not like that. If the person is only employed, so employment income would be there. If a person is running a business, trading income would be there. If you are in UK and you are employed as well as you have properties on rent, so you would be having 2 sources of income. So for every question, for every person, these 6 must be there. It's not necessary. Any 1, any 2, any 3, any 4, any 6, all 6. Any sources of income can be here, but maximum sources of income for an individual person are 6. And no individual tax is calculated, no separate tax is calculated for each head. Rather, we have to take the totals. By adding all of these sources, you would be getting the total income. From this total income, deduct the personal allowance. And for the fiscal year 23-24, personal allowance amount is 12570. And after this deduction, you will get taxable income. And on this taxable income, we must apply the tax rates to find the income tax liabilities. Let me move on the other slide. Let's say this taxable income, once calculated, on this taxable income, you have to apply on this taxable income, you have to apply the tax rates. Let me mark on this taxable income, do apply the tax rates, and will find the income tax liability for the individual persons. So what is the systematic way for finding the income tax liability. Prepare an income sheet. So that's the income sheet of the person. Income sheet or also terms as the tax sheet. In the income sheet, record income from all the sources to get the total income, deducting the personal allowance, arriving at taxable income, multiplying with the tax rates, and finally the income tax liabilities. Thereafter, on this taxable income, how these income tax rates are applicable. What are the income tax rates? So basically, there are three types of rates. For the taxation of individual person, for finding the income tax liabilities, there are three types of tax rates. One of them is basic rate, second one is high rate, and third one is additional rate. In basic rate, 20%, high rate taxpayers would be paying tax at 40%, whereas additional rate taxpayers would be paying tax at 45%. These are the rates defined by the given by the HMRC. But these rates are applicable in the form of slabs, in the form of band limits. What are these bands limits on which 20%, 40%, or 45% is applicable? If your taxable income is in between 37,700 pounds, 20% is applicable. If taxable income falls in between 37,701 to 125,140, 40% is applicable. If taxable income is more than 125,141, then it is the tax rate will be 45%. Person who is paying tax at 20% is basic rate taxpayer, BRTP. Person who is paying tax at 40% is high rate taxpayer. Person who is paying tax at 45% is termed as additional rate taxpayer. And these tax rates are applicable in the form of bands. What are these bands? If taxable income is falling in between this limit from 1 to 37,700, relevant rate will be 20%. If income is more than 37,701 but less than 125,140, relevant rate will be 40%. If the taxable income is more than 125,140, on the excess amount, 45% is applicable. Don't worry, we have 8 examples with respect to this thing, that how we can calculate the taxable income, how we can calculate the income tax liabilities, how to apply the band limits, how to apply the tax rates. For this understanding, we are having 8 examples and we are going to discuss one by one. Let's perform few examples. Example number 1, requirement is to calculate the taxable income. Remember how to calculate the taxable income? From total income, deduct the personal allowance. Total income in this example is given as 30,000. Personal allowance amount is fixed for the fiscal year, that is 12570. Resultingly, taxable income is calculated as taxable income. The difference of these two is 17430 is a taxable income. And in example 2, again, the requirement is to calculate the taxable income, but you can see that in this example, total income is less than the amount of the personal allowance. In example 2, total income is 10,000. And if personal allowance is deducted as 12570, so the taxable income will be 2570 negative. And that is not possible. If this is the case, whenever your total income is less than the amount of the personal allowance, you have to restrict the amount of personal allowance. I repeat, whenever your total income is less than the amount of the personal allowance, restrict the amount of personal allowance. Instead of deducting 12570 in total, restrict it to the income level, so the taxable income would be nil. We can write a point here: taxable income can be nil, but cannot be negative amount. It can be nil, but it cannot be created as negative amount. And whenever your income is less than the personal allowance, you have to restrict the amount of the personal allowance so that your taxable income become nil and not a negative figure. In example 3, we have to calculate the income tax liability. And in this question, the total income is 35,000. From the total income, if we deduct the amount of personal allowance of 12570, so the taxable income, and from the total, when you have deducted the personal allowance, the taxable income is 22430. And on this taxable income, we have to apply the tax rates to get the income tax liability. Remember the band limits. First band limit is 33,700. Second band limit is 125,140. Here in this example, taxable income is less than 37,700. So we can say that only one tax rate is applicable, because first band limit starts from 1 and it ends on 37,700. This taxable income of 22430 is in between this basic band limit, on which 20% is applicable. 22430 into 20%, 4486 is the income tax liability for this example. Let's perform another example, number 4. Total income is 57,850, deducting the personal allowance of 12570. If personal allowance of 12570 is deducted from 57,850, resultingly we end up with a taxable amount of 57,850 minus 12570, 45,280 45,280 is this taxable income. That is, taxable income is more than the basic band limit of 37,700, but is less than the amount of the high band limit, which is 125,140. So in this example number 4, the taxable income is more than the basic band limit of 37,700 and is less than the second band limit of 125,140. How to perform calculations? The first band limit is from 1 to 37,700. We can say that from this total taxable income, the first 37,700 is taxed at 20%, 7,540. Thereafter, from 37,701 to the total taxable income of 45,280. Let me take the difference. 45,280 minus 37,700. Difference is 7,580, on this difference, any amount which is more than the basic band limit to the total taxable income. That is a basic band limit. From this to the total taxable income, the difference is 45,280 minus 37,700 is 7,580, on which high rate of tax, which is 40%, is applicable. Multiplying it with 0.4, 3032, and total tax liability is a sum of these two, 7,540 plus 3032, 10572 is a total tax liability for this example number 2. Let's move further. In example number 5, directly the taxable income is given in question. Taxable means from the total income, personal allowance has already been deducted, so the taxable income is directly given in question. If the taxable income is directly given in question, no need to deduct it again. And from this taxable income, if you check, this 112,000 is more than the basic rate band limit of 37,700, but is less than the second band limit of 125,140. How to apply the calculations? And if we are having first band limit of 1 to 37,700, to this extent, from the total taxable income, to this extent, basic rate of tax is applicable, and basic rate is 20%. So we are having an amount of 7540. Then from the second band limit from 37701 to total taxable income of 112,000. On the difference of 74,300, high rate is applicable. 29720 is the income tax liability here, 29720. And the total amount is the total income tax liability, 37,260. I would request to attempt the next example at your own first. In this question, taxable income is directly given. This total taxable income of 150, a difference from the previous example, this amount is more than 37,700 and also more than the high rate band limit of 125,140. It means in this example, all three taxes will be applied. But for confirmation purposes, let me guide you another step. The sum of these two should be equal to your total taxable income 74,300 plus 37,700. The sum of these two would be equal to your total taxable income, that is 112,000. And by keeping all of these things in mind, just pause the recording here. Try to attempt example 6 at your own first, and then we'll compare with my answers. Your time starts now. You can take 2 minutes time to attempt. All right. First band limit is from 1 to 37,700. From the total taxable income, initial 37,700 to this extent 20% 7,540. Second band limit starts from 37,701 to 125,140. Difference of these two values, the difference of these two values is 87440. On this amount, high rate of tax, which is 40%, is applicable, and the resulting amount is 34976. Finally, for income which is more than the second band limit from 125,141 to the extent of the total taxable income, which is 150,000, the difference is calculated as 24,860, to which 45% is applicable. If 45% is multiplied with 24860, 111,187 is calculated. 24860 into 0.45 44487, the sum of these three amounts 34976 and 7540, 53703, 53,703 is the income tax liability for this example. There is an income tax liability. Another confirmation you need to check. The sum of these three values should be equal to your total taxable income of 150,000, 37,700 plus 87,440 and 24860, 24860. 150,000 is a sum of total taxable income, and for this 150,000 taxable income, the income tax liability is 55,3,703. Another example for the same case. Example 7, taxable income of 132,000 is given. From this 132,000, the basic band limit is 37,700. From 1 to 37,700, this amount from the total is gonna tax at 20%, 7540 is calculated. Total taxable income is more than the basic rate band limit of 37,700, and also this 132,000 is greater than the second band limit of 1 to 5 140. From 37701 to 125,140, the band limit, the difference is 87440, on which 40% is applicable. 34976 is the resulting amount. From 125,141 to the total taxable income of 132,000, difference of 6860 is gonna multiplied with 45%, and the resulting amount is 3087. The sum of total tax liabilities 3087 plus 34976 and 7540, 45,603. 45,603 is the total income tax liability, and the sum of these three values should be equal to your total taxable income, 37,700 plus 87440 plus 6860, and that's tantamount to 132,000. This is how you can calculate the tax liabilities for any question. Last example. In this example, taxable income of 141,250 is directly given. From this 141,250 initial amount of 37,700, on which 20% is multiplied 7,540. Second band limit, I'm taking the values from here because first two steps are the same. 125,140 difference will be 87440, on which 40% will be multiplied 34976. And the last step is somehow different. 125,141 to the total taxable income of 141,250. 141,250 minus 125,140. The difference is calculated as 16,110, and on which 45% is multiplied by 0.45 and 7249. 7249. The sum of all these three values is a total for income tax liability 7540, 34976, 7249. That is 49,765 is the income tax liability, and the sum of these three should be equal to your total taxable income, and 37,700 plus 87440 and 16,110, that is 141,250, which is equal to your total taxable income. So this is how you can calculate the tax liabilities for the individual person based on the taxable income and the availability of the band limits and the tax rates accordingly. Yet to study, yet to know a lot things in the taxation. That is a basic guidance video that what are the topics which we shall be covering in the TX syllabus. The capital gain tax, inheritance tax, value added tax, income taxes, corporation taxes, NICs, all of these are the discussions. Thereafter, we talked about the sources of income. For an individual person, there are mainly 6 sources of income, which are property, employment, trading, interest, dividend, pension. All these 6 sources are separate chapters, or you can say that separate topics in the taxation paper. And thereafter, we also calculated the tax liabilities according to the fiscal year 23-24, which starts from 6 April 23 and ends on 5th April 24. And all of the tax liabilities for an individual persons are to be calculated based on the fiscal year thing. And for this fiscal year, there is personal allowance amount of 125,140, and there are 3 types of rates. Basic, high, or additional. Based on the taxable income according to band limits, we can multiply the tax rates to find the income tax liability. I'm keeping till here. Inshallah, see you in the next video. Take care and bye.